Welcome to the business interview. I'm Markus Karlsson. The outlook for the global economy is darkening. The Organization for Economic Cooperation and Development struck a downbeat note this week when it came out with its latest forecasts. The Paris-based think tank slashed growth projections in 5 out of 7 leading economies, including the United States and Japan, and it says the weak figures from the Eurozone is the most worrying feature. For more, we can speak now to the man behind these latest projections. Christian Kastrop is Director of the Policy Studies branch at the OECD. First of all, welcome to the program. It's good to have you here.
Thank you. I'm glad to be here.
Now, what's been happening in the global economy? Why are you coming out with these slashed forecasts?
Yeah, you are right. The forecast has been written down for a lot of countries. And I think we saw some risks in our latest outlook, which was presented in early May. And in fact, now some of these risks have emerged. I may only mention the geopolitical risks, which has already slashed exports in some countries. And of course, also the expectation channel has been darkened a bit, also due to the geopolitical tensions. And so increased uncertainty normally leads that the leading indicator is going down. And if the leading indicator is going down, of course, we have also to react with our projection.
Just to clarify, when you say geopolitical tensions, what areas and regions of the world are you talking about?
I'm talking about the Arabic part of the world. You all know this ISIS issue. We have to talk about Ukraine and Russia. And maybe there is one very acute geopolitical risk already today. This is the Scottish referendum. Mm-hmm. Maybe this is a minor one compared to the other two, but there are some, and they are affecting not so much in real terms right now, but they're affecting, as I said, very much the expectations. And if expectations go down, then you see with a certain follow-up of some months also the real data is coming down.
You're talking about confidence, the confidence
issue. I talk about confidence, and I talk about what business leaders expect for the future, and they clearly expect a downwriting of things, so there will be probably lesser export to certain markets, lower imports. So the whole picture darkened. It's not really one single issue, except the geopolitical issue I just made, but there is an overall issue.
You say, though, that the Eurozone is of particular concern at this stage, and you've written down your growth forecast this year in the Eurozone, or of the Eurozone, to just 0.8%, a pretty measly figure, much weaker than we were expected at the start of this year. Yeah. What's happening in the Eurozone?
Yeah, it's a lousy figure, I agree, and it could be much better. And most of all, it is not really sufficient to solve the problems. And this is still the slack in the labor market. And
unemployment, basically.
Yeah, we have high unemployment. It's really outrageously high. And of course, this again dampens all the things in the economy. If you fear for being unemployed, of course, what will you do? You will slash your consumption. And as corporates are uncertain about exports in some Central European countries, they will slash the even low level of investment. And I think this is where it's all about.
Now, you've been calling on the European Central Bank to come out and do more to stimulate the Eurozone economy. Do you expect it to do so? Or whose responsibility is it to get things right?
I think it's always a mix of things. I think what the ECB has now decided is very much in line with what we proposed, or we indicated it already in our last outlook, but now it is confirmed and even strengthened by our new interim outlook.
It's come out to slash interest rates, come out with stimulus measures, etc.
Yes, and I think we now recommend to the ECB also to do a very special, tailored quantitative easing, so some other name for this is unconventional measures. So we would ask the ECB in doing so, and the latest messages from the ECB are just pointing in that direction. So we are very much in line with the ECB. But
there has been this debate whether or not it will happen or won't happen. You say that, the ECB is pointing in that direction.
I think the ECB will go ahead. They are still looking for a well-tailored package, and this is what we would also recommend, because you cannot simply compare the role and the institutional design of the European Central Bank is very different from the Bank of England or from the Fed in the United States. They can't simply do the same. They really have to look for their own way, and this is what we also called for. They should do that. And of course, anyway, if you use such instruments, you have to be aware of two things. First of all, you have to be cautious. Yeah? These instruments have certain risks in itself if you use them. And second, you cannot do the job alone. You need fiscal policy and you need structural policy. And this is, so all three things are important for the Eurozone.
And the fiscal side, the policy side, is that happening?
I think in the fiscal side, we have to be careful that the ECB is not offering an easy way out for avoiding structural reforms or not doing your fiscal homework. This should not happen. And of course, even in the Eurozone, it's different. For instance, some countries who are relatively well off, say Germany, they have some fiscal room for maneuver, they should use that. Also for some other countries, of course, there's the Stability and Growth Pact in the Eurozone. There is also flexibility within the rules, and you may have seen we also recommended that the European Commission and the European Council should use this inbuilt flexibility in the Stability and Growth Pact. For some other countries, which have lost confidence due to a very high level of indebtedness, they really have to get back to the confidence side of the road, and they have still to go forward with fiscal consolidation. It is unavoidable.
Now, I want to take a step back and perhaps ask you more of a philosophical question. We did talk at the start of 2014 now how this would be the year when we finally put the financial crisis behind us. But now it seems as if 2014 is turning into another lost year. What do you think about that? Is 2014 a lost year?
It's not the year which brings us quite ahead of the curve, to say so. This is, I think, what is true for this year. Whether it is really so bad in the longer run, let's see. So there are still signs of recovery. There's not everything is bad. So please don't paint the picture too gloomy now. There are signs. So the peripheral countries, the program countries, which were in a lot of trouble, they did do a lot. So it's not a minor thing. So I think there is a positive sign, and there is a regaining confidence in some countries. Some countries have done huge structural reforms already. They have done reforms on the labor market, on the product market. They have also cut their budgets, getting back on the fiscal track. But on the other hand, if the situation is not going better, and it's again, this year is really too modest really to bring it forward. They can't do much more now. This is also another issue. So if you cannot come out of the slump, it's very difficult to call for a further encouraging reform in those countries. Other countries, Germany, France, they could probably do more.
Let me play devil's advocate just for a moment. It is my job after all. You say that we shouldn't perhaps look too, that we shouldn't paint too bleak a picture. Do you think, though, still there is a risk of further downgrades, further slashed forecasts looking ahead?
There is a risk. But on the other hand, even if we have to write down some other countries, we should not forget that for the world economy, it's not just Europe. And we have a very interesting development in the world economy, so that especially the emerging countries, especially China and India, are doing not that bad. In fact, they're doing well. And so the emerging markets have recovered a bit.
So once again, we're looking at the emerging world, so to speak, emerging economies to lift us all up.
This is where the music plays. I think if you think about the next decade, I think the music will not play in the Eurozone. It will probably not even play in the United States. I think the big bunch of all of this coming out from the emerging. I think if you think about world growth, you should keep in mind that China alone is now responsible for a quarter of that. Mm-hmm. So this is huge. And I think we still, as Europeans, as, say, OECD countries, maybe we haven't realized that to the full, that the emergings are where the growth will be the driver of growth of the world economy. And what they do is very, very important.
Now, I want to hone in on equality a little, inequality rather, because you have also warned that inequality is a growing danger for the global economy, essentially that the rich are getting richer and the poor are getting poorer. What are the reasons behind this development?
Yeah, I think this is true. I think we have a long-term trend which shows that. One issue, of course, is that there is a situation that indeed profits have been risen quite a lot over the recent decades. And for a lot of countries, the wage development was not really in line with productivity. So I think there is a loss on paying the right wages. So I think for a lot of countries, they have reached competitiveness via wage cuts. I think this should come to an end. We need the wage channel working to the full, also getting confidence to consumers, money to be spent on consumption goods, and then leading to investment. So there is a demand channel. On the other side, in some countries, sometimes this is especially a problem also in the emerging markets where you have not really a progressive tax system. So they do not really build a middle class. So I think the tax system should be favoring the development of a really good middle class. And then last but not least, where we still need a lot of improvement is in the whole area of education. So in the long run, so there will be always a pressure to very high-skilled workers getting the good wages. And in a lot of countries, the education system is not really responding to that challenge. And therefore, for the future, we really see that the wage growth will be in the advanced sector, and the big, broad, middle-educated people are lost. And therefore, education, upskilling is the word here, is a very, very important measure to get the middle class richer.
All right, Christian Kastrop, unfortunately we have run out of time. I want to thank you for speaking to us here at France 24. And with that, we're going to be wrapping up this edition of the Business Interview. Thanks for staying with us.